What did you know that other strategists weren't factoring in?
Well, it's interesting. So a year ago when I put together my forecast, I was not wildly bullish on the economy nor on earnings, nor was I, significantly bearish. I thought it was, mid-single-digit earnings growth. My EPS target was 115, which was actually below the consensus, but I was high in the street on actual price target. So I was sort of the big bull on multiple expansion, and I think that was the most.
Whereas your peers were seeing a contraction in the P&L.
Contraction or flat, and all that. So if you look at the second highest price forecast, I think he was also the high on the street for earnings. And I think so. This concept of multiple expansion against low GDP is something that I think was a big head fake to a lot of strategists, but also to a lot of investors as well. I think that was sort of a big pain trade, is not really believing that the market can still put in very strong returns without the acceleration in GDP.
I hope you're getting a bonus for this.
I do too.
I hope your boss is watching, because, I mean, pretty much you are going to hit it. We're probably going to hit it in the next day. We could hit it in the next couple of minutes. Who knows?
Yeah.
2091 right here. What's critical in your assessment for 2015?
In terms of maintaining this bullish position.
Yeah.
So, look, I think I am going to be more bullish, continue to be bullish into next year. I think the volatility surface, if you will rise, right? So we're going to see a lot more dynamic and a much more interesting trading environment. You're going to have FX volatility going up. You're going to see commodity volatility going up or continuing to impact, and all that stuff is going to flow into equity market volatility. So I'm bullish. I think we can put in another 10% plus year. But I think it's going to be, we'll see more Octobers, we'll see more Decembers.
Really? Are we going to see it before or after the Fed jumps in and decides to hike rates?
Well, everyone's been so focused on this rate hike issue. I'm not so sure. I think if we do get a rate hike, it will be one of the most telegraphed rate hikes ever. And I think the markets have been processing that slowly and steadily. And I think Yellen and her colleagues are going to be very focused not just on rate hikes, but on rate volatility, and they're going to manage the volatility of how the bond market reacts to whatever they say and do, right? So I'm more focused actually on FX volatility as a sort of a big driver of not necessarily tragic volatility in the equity markets, but, some very interesting developments, and it's going to drive a lot of stock and sector rotation.
Okay, so considering that you're seeing another October in our not-so-distant future, how do investors play it from a names point of view? Should they be more growth names, value names?
Well,
what are you suggesting?
From the very near term, stay with winners. Winners will stay winners. Losers will stay losers.
Okay.
Once we get through that, maybe somewhere into February or so, I think you're going to start seeing sector rotation happen pretty aggressively. Why? Because the market's more expensive than it was a year ago, or 2 years ago, or 3 years ago, but the continuing tilt is higher. And against that backdrop, people need to find value.